Hey everyone, this is June from Turning Point Life Investment, and this video is for the week ending in April 11th, 2009. So we ended another positive week. Notice how we have 5 consecutive straight up weeks. I'm looking at a 3-year weekly view of SPY. Now, if it weren't for Thursday, the market would have stayed relatively flat throughout this week, but it was that nice push on Thursday, the nice gap up, that pushed this market a little bit higher towards, once again, towards this 20-week moving average. Overall, from a weekly point of view, really nothing much has changed from last week. We're still pretty much near some type of strong resistance, as you can see with this 20-week moving average, and as well as a price level around this upper 80s, around 88 and possibly even 90. That would be the next resistance level. So as you can see, even though we had some pretty decent rallies within these last 5 weeks, the market's getting a little bit stretched. It's starting to hit its head towards some kind of strong resistance currently. So going into a 6-month daily view, as you can see here, we're very close to a resistance level right here around the 88, 87 level. Not to mention, I mentioned last week that notice how this 20-day moving average is starting to cross above this 50-day moving average. So again, showing a shift in momentum towards more on the bullish side. Volume has been a little bit on the low side this entire week. So this is telling me that more or less this entire pattern looks to be more consolidation than anything else. One thing you would notice here is that the MACD is starting to show a little bit of divergence here. So all of this, the low volume, the MACD divergence, and the resistance right up ahead, it's telling me that the market is getting a little bit weak towards the upside. So if you are long this market, I would be just a little bit cautious to be on the long side. If the market does decide to punch through resistance, expect to find some kind of resistance right here, right around the 95 level. Okay, as you can see here. So that would be the next level of resistance. And of course, if we look back, there's always different levels of resistance, right around the 100 and then the 105. Okay, but more importantly, I will look towards more the immediate levels around the 88 and then the 95 levels first before looking that much further. Okay, so we go into the VIX. Now finally, we managed to get some kind of movement in the VIX. I've mentioned from these last several months that this VIX has been in consolidation. As you can see here, it's consolidating within this triangle, and finally we got a nice breakdown of this out of this triangle here. So that's a very good bullish sign as far as the market, meaning that there's less volatility going on in the market. And usually bullish markets are marked with low volatility, whereas bearish markets, as you can see here, is marked with high volatility. Now, of course, the VIX, just like the market, would not drop straight down. I would expect maybe a little bit push lower if the market continues higher. If the market corrects, they'll probably pull back towards this and retest this as resistance. If that is the case and this holds as resistance, that actually would be a good entry into going long into the market, because once again, if the VIX continues to drop, then it's a good sign the market will continue to rise. So that's something that I'll be looking for, at least paying attention to, is a pullback towards a retest of this resistance area here for the VIX. So going back to the market, like I said, nothing really much happened this week since it's a short week. However, what I do know from my experience is that this Thursday, usually the Thursday before the week of expiration, is typically a head fake day. So if we have a nice update on this Thursday, more than likely the week to follow into expiration will be a down week. So given that, I would expect next week to be some kind of consolidation or some kind of pullback towards support, possibly 80 level. As you can see here, that's where the previous gap is. So I would say, and that's also where the moving averages are as well. So I would say if the market does pull back, look for support somewhere around the 80, 81 and a half. And if it's a deeper pullback, I would say around the 70, high 70s, or around 78. That level. So those are good potential targets if the market does decide to pull back next week.